Like the idea of living off of completely passive dividend income? How about living off of safe, growing passive dividend income? Want to know about great stocks that are rewarding their shareholders with bigger dividends? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. One of the most common mistakes I see new investors make is to chase yield. They see an 8%, 9%, or 10% yield on a stock, and well, that's all they look at. Business model, bottom line growth, balance sheet strength, pricing power, valuation? Nah, high yield, baby. Well, a high yield looks great on paper until you start to see poor long-term investment performance. Also, a high yield doesn't matter very much over the long run if the dividend isn't growing, or worse yet, is being cut. See, I focus on high quality dividend growth stocks that represent equity in world-class businesses. These aren't high yield junk stocks. They're high quality stocks with good yields and, most importantly, safe growing dividends. If your dividend can't grow, inflation is gonna eat you alive. You wanna make sure that you can keep up with inflation, the rising cost of life, over the coming decades. And the best way to do that is to protect or even improve your purchasing power with regular increases in your passive income. Today, I wanna tell you about 3 dividend growth stocks that just increased their dividends. Ready? Let's dig in. The first dividend increase I want to tell you about came from Duke Energy Corp, stock ticker DUK. Duke just increased their dividend by 2.1%. Not a massive raise, but the attractive thing about Duke is the reliable nature of their fairly sizable dividend and the low single-digit annual growth of the dividend. Duke is one of the largest utility companies in the United States. They reliably provide power to millions of customers, and those customers reliably pay their utility bills, which results in reliable revenue, profit, and dividends. And as the price of power goes up, the dividend also goes up, as Duke has been demonstrating for almost 2 straight decades. The utility company has increased its dividend for 18 consecutive years. If you're living off of dividends, that's the kind of track record you want. It's reliable, durable dividend income you can count on through thick and thin. And Duke is no slouch in the yield department either. It yields 3.9% here. That's about 3 times higher than what the broader market yields. The stock offers a great combination of yield, reliability, and growth that can make it suitable for investors who want to live off of dividends and sleep well at night. Duke is up more than 13% year to date, but the valuation doesn't look unreasonable. I wouldn't say the stock is extremely cheap either. Most basic valuation metrics are within spitting distance of their respective recent historical averages. The price to cash flow ratio, for example, is 8.1. That is a bit below its 5-year average of 8.4. It's viable here, but a dip would make it even more appealing. The second dividend increase you should know about came from Computer Services Inc., stock ticker CSVI. Computer Services just increased their dividend by 8%. An 8% increase in passive income for doing absolutely nothing other than holding stock is always most welcome. I mean, how can you not be happy with something like that? Also, check this out. The dividend is up 4-fold over the last 10 years. This company is able to hand out generous dividend increases because it's growing like clockwork. Earnings per share has compounded at an annual rate of nearly 10% over the last decade. This marks the 50th consecutive year of dividend increases for the technology solutions provider. It's now a dividend king, 50 years into dividend growth, and they celebrate it with an 8% dividend increase. You've got to love it. I frequently come across this misnomer from investors, especially new investors, who believe that decades into dividend growth will automatically trigger a dividend growth slowdown. But that's not necessarily true at all. A lot of stocks out there are handing out big dividend increases 20, 30, 40 years into dividend growth. A number of these companies are handing out some of their biggest dividend increases ever. This stock doesn't look cheap, but it never does. It's a thinly traded over-the-counter stock that flies way under the radar. Despite that, the valuation is always elevated. The 5-year average price-to-earnings ratio is 22.5, so this is never what you might call a cheap stock, but with a price-to-earnings ratio now over 28, the valuation is richer than it usually is. That said, this company deserves a high multiple. It's fundamentally excellent across the board, including no debt. I mean, the stock is up 200% over just the last 5 years. It's been a phenomenal long-term investment, and it will likely continue to be one. Last but not least, let's talk about the dividend increase that came in from JM Smucker Co., stock ticker SJM. JM Smucker just increased their dividend by 10%. Take that, inflation, a 10% pay raise for doing nothing other than just holding stock in a brokerage account? That's so easy, even I can do that. I don't know if I've ever gotten a 10% pay raise at my old day job, but even if I did, I would have had to work extra hard to get it. Now all I have to do is be a shareholder. Being an investor is the best and easiest job I've ever had. This is the 25th consecutive year of dividend increases for the food company. Yep, this puts them in the same league as Dividend Aristocrats, playing with the big boys now, and the company celebrates the 25th year of dividend raises with a larger than average increase. 10% is measurably higher than their 10-year dividend growth rate of 7.9%. You're pairing this kind of significant, reliable dividend growth with the stock's current yield of 3%, so you get a market-beating yield and inflation-beating growth. I don't know who or what is left to beat. Surprisingly, this stock actually looks undervalued. The stock's price-to-earnings ratio of 16.8 is below its 5-year average of 18.3, not to mention well below the broader market's earnings multiple. Most other basic valuation metrics follow suit. If you're looking for some more exposure to basic food staples in your portfolio, JM Smucker ought to be on your radar, especially after this nice dividend increase. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these dividend increases. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.